Welcome to Good Money Guide. We're back with Fiona Cincotta for today's podcast and chat. So Fiona, how are you? All well in your world at City Index?
Yes, good, thank you. Great to be back. Had a lot of fun last week, so looking forward to this week's session as well.
And actually, I suppose this is probably a good moment to mention the risk warning. None of this is financial advice. It is all, of course, educational and informational chats. We don't know your personal circumstances. We're going to touch on a few of the things we spoke about last week as well. The first, obviously, being AI, because that's how Jackson started his analysis with these AI stocks in a land grab for generative AI coverage. But also, as an offshoot of that, one of the things that we're going to discuss is energy and nuclear stocks, because obviously all of these generative AI technologies require power, and that's got to come from somewhere. So that's pushing a lot of these stocks higher. We're also going to talk about, why they're drawing so much power. We're going to have a look at uranium, which is trading at recent highs. There's a load of interest in that, mainly from sophisticated investors, because it's quite difficult to trade. So we'll just have a quick chat about where and how to trade that. And of course, all of these stocks are trading at all-time highs. So we'll discuss, whether or not you should be buying at all-time highs, if things are going to run out of steam, and what signs you should look for. And the FCA, of course, came out with an interesting report last week on the gamification of trading apps, which is always interesting. I think they've done a lot of research on behalf of trading apps and told them what works and what doesn't. So, we'll touch on that. So let's start with AI stocks, shall we? What's your take on the major players in the AI world at the moment?
Yeah, I mean, it's been a really interesting week, hasn't it? I think just as far as sort of the AI trade has been concerned. Obviously, we saw Nvidia sort of pip Microsoft just last week and become the most valuable company in the world for a short period of time. Before tumbling lower, we saw it drop around 13% in a couple of sessions, losing around 430 billion in market cap. So some massive swings. Just on Monday, we saw a drop of 6%, and then on Tuesday, we saw a rally of 6%. So these are really massive swings that we're seeing. But I think it's quite interesting because I think, whilst we're seeing sort of these big moves in AI, there is always this question as well, I think, as to, and it's always going to be on investors' minds, how much of this is sort of, a hot bubble, how much of this is hype, how much of this is due to real world application. And, and I think, we've said last week as well, this is, we're very much on opening that door to understanding and realizing the real world application for AI. But right now, at this very point in time, I think there are actually very few companies that are actually benefiting in forms of revenue from AI. Obviously, Nvidia being the standout sort of poster child of that. But it is actually a really big cost right now for a lot of firms as well. And here we're talking about those big players, I think very much sort of the Alphabet, the Amazon, the Apple. This is, proving actually to be a big cost in the sense of trying to be at the top of that leaderboard as far as AI is concerned. Even Meta, and I mean, if we just think about Meta's results, the previous quarter's results, their share price actually plunged. I think it was around 15% on the news that actually spending was going to an investment in AI was going to increase significantly, which could, obviously impact profits. So we're still very much at that stage where it's not necessarily being monetized, but very much an investment side of big players right now.
Yeah, I think there's some really interesting things going on in the VC world, particularly these early stage companies, which unfortunately people can't invest in. I mean, there's a few ways. Scottish Mortgage Trust, didn't they come out and say recently that they invest in unlisted companies, and one of the things they were looking for is the next Nvidia, and they'd actually just stepped away. They'd stepped away from Nvidia, hadn't they? Which, to be fair, you could see a mile away. You can always, I think, a really good indication is when you look on social media and everybody's talking about something. Yes. Therefore, everybody is going to buy it, and then next week people will get bored and it'll come off a bit. No, AI, I think it's so interesting, and I think it does generate revenue. There's a great tool that I use. We use it on the Good Money Guide as well, called Hey Gen. I'm not sure if you come across it. It costs us about £1,000 a year to use, and we upload. I've uploaded an avatar, and then if we ever need to create short form video content for something, and we don't want to film it and don't want to go into the studio, then you can just put a script in there, and it replicates your voice and replicates me doing a sort of presentation, and it is utterly incredible. I mean, to the untrained eye, I don't think you would realize there was a difference. And that company is generating huge revenues. I had, because they announced a $60 million fundraise, and I looked through how many customers they got. I can't remember exactly how many it was. It was in the tens of thousands, or might have even been in the hundreds. But anyway, I mean, they are actually making money off AO, which is quite nice to see, particularly when there's a use case for a bubble. But anyway, energy and nuclear stocks, all of this generative AI technology has to be powered by something. Before it was crypto using up all the energy for mining. They obviously still are. AI uses up a huge amount of processing power. So what do you think is going to happen with the energy sector and nuclear stocks? Jackson highlighted a few, actually, so we'll touch on a few of those. But what do you think is going to happen?
Yeah, it's really interesting because it's a sort of, it's a great alternative way to be able to access the AI trade, right? Being able to look at sort of that energy side of things. I mean, I think the report that was highlighted by Jackson was that, Goldman Sachs mentioned that the energy usage would be 10 times that but needed for Google search for the same search. So, and that's where whilst we're at ChatGPT, imagine when we're at number 8, the amount of energy.
It's going to be incredible. Just looking at some of the statistics, ChatGPT-3 has 175 billion parameters. T4 has 1.77 trillion parameters, and that is going to go up exponentially, isn't it? And all of that processing power has to be drawn from somewhere.
Yeah, exactly. And I mean, even again, other statistics that he pointed to, for example, because you've got then the use of these data centers to house these chips. I think at the moment there are around 8,000 globally. A third of those are in the US, using around 2% of the global total electricity capacity. Some really interesting countries were highlighted as well. So, if Ireland, so it has sort of this tax advantage, low tax system to attract investment, attract companies, houses 82 data centers, and is looking to increase that. And actually, those use 17% of the total electricity capacity of Ireland. So, big numbers, huge insane, electricity use. Yeah, completely. And it's something that I don't think we necessarily think about when we think about the AI trade. Obviously the most obvious one is the chips. So then to sort of think about this as an alternative is a really interesting use case as well. So yeah, and the question then is, how could you access that trade? What are we looking at? Where are we going to get that energy from? Because this energy requirements and necessities are going to increase. I mean, that seems pretty clear from the data that we've been looking at. And so, yeah, I mean, nuclear, that would be an alternative or a potential energy source for this. And how would you access that? That would be the spot uranium trade. I mean, that's the direct access to it. And then you would also have alternatively the miners of uranium as well. I think if we just looking at the chart for uranium, we've seen that it rose to it's had a rally across this year on the expectation of higher usage. And also we've seen a similar response in uranium miners. He did. Now, there are a couple pointed out. Was it Next Gen in the US? So you can either access that through the US. There are a couple of miners in the US. I think it was Next Gen and can't remember off the top
Yeah,
of my
I'm
head.
just trying to have a look. New scale
Palladian
power.
energy.
Yeah, and new scale power was one that someone else actually mentioned when we put the analysis on LinkedIn. That was quite interesting. So there's plenty of stocks out there that you can get exposure to
Yeah.
uranium. They all come, of course, with their own with their own risks. It's still quite a tricky one to trade. Uranium though.
Yes, yeah, I think so. I mean, it's just not as widely traded as, for example, precious metals, as other commodities. So that does bring with it its own challenges as far as liquidity is concerned, as far as sort of, being actually able to even enter the trade to start with. Where are you going to be able to access that through? So it definitely does have its own challenges with it, and as you pointed out, that's again something you just do need to be wary of, especially if you're potentially newer to trading sort of commodities. Then it's comes with concerns, and watch what you're doing and make sure that you're comfortable at the levels that you're trading with.
Perhaps one to tuck away in an ETF and try and ride the wave rather than to time what's going to happen in uranium, just in case there's another 2006 bubble.
A good point. I think these sort of commodities are better traded over the longer term, where you can get a sense of trend and a sense of idea, rather than, as you said, trying to time entrance and exits. Just because of the unpredictability of the short-term moves, which can be very challenging to trade.
So can you trade uranium at City Index? Is that a product you offer?
Yes, so you can actually trade it through the ETF, Uranium ETF, on our platform, and then there's also access to some miners as well. So that would be sort of the way to access the trade.
Cool.
But yes, we do offer that.
I was just actually googling it. You wrote an article on top uranium stocks to watch, but that was back in November 2021. So anyone that Google City Index uranium stocks to watch and see what they've done. I've not looked through the list, but yes, there's some information on uranium on City Index, and actually we've got a list of uranium stocks to watch as well. We've written about uranium quite a few times. It's a very niche, but a very but a very interesting market, which actually brings us...
I was going to say, I imagine that it'll gain in popularity as perhaps sort of there's more discussion surrounding the energy usage of AI, in addition to obviously the crypto usage, which has already been discussed.
Well, hopefully there'll be some good indices to trade around it, because you guys have an AI index, don't you? Which we covered a while ago, which was quite good. So you can just trade it in one go and diversify a little bit. I think that would be quite interesting with uranium, because you try and reduce the risk to exposure. So you're not just exposed to the spot price. You've got the profitability from the companies that actually mine it as well. Is quite interesting. And actually that brings us nicely on to the next point. All of these things are trading at all-time or relative or yearly highs. I think it's one of the things, everything's become very faddy, almost extremely faddy. Everybody jumps on a bandwagon, and particularly with social media, it all travels extremely quickly, almost exponentially now. So all of these things are trading at all-time highs. What's your view on all-time highs? Should we be dipping our toe in? Are all-time highs generally a good time to buy, do you think, or is it worth taking a second look?
Do you know, I think with rallies, they rarely go in straight lines, so you will often see a rally move and then you'll see some pullback, and when you see those pullbacks, you then get a sense of whether there are dip buyers, in which case then we can see the price move higher further still. But there is that, I think, caution. You need to be cautious when you're looking to buy in at all-time highs, because like you said, sometimes what's happened is literally it's created a little bit of a bubble effect on social media and the news and the hype, and that sort of helped to push the stock to those levels. But sometimes actually there is the fundamentals behind it as well. But then there is the concept of timing. So I do think that sort of if you have a look at the charts, if you have a look as to whether a stock is actually overbought on the RSI, that can sort of just give you some indication as to whether you might expect some form of consolidation, a slight pullback, which might provide a better entry price for the trade. But the other thing I think is, if you are looking to trade long term and seeing it as more as an investment, then actually maybe, that doesn't matter because you think there is a bullish case behind the stock anyway. So, I would just be cautious about buying in at all-time highs. Watch for a good price for entry, perhaps looking for a pullback, form of consolidation, but then be clear on what your plan for this trade is. Are you looking for a long-term plan here? In which case, then, maybe you think this position could still go higher. Are you thinking it as short-term trade? Then if you're looking short-term and you're jumping in at all-time highs, maybe it might be better to go short sometimes,
Okay. How au fait are you with RSI indicators and whether or not a stock or asset is overbought, undersold? Do you want to take us through what they are very quickly?
Yeah.
Because you could casually drop that in there as though everybody knows what an overbought RSI is, and I'm sure a lot of people do. But I'm sure there's a lot of people that don't.
I don't know. I look at it every day. I think for me it's sort of same as having tea or coffee, So basically the RSI, relative strength indicator, it's an indicator that you can pop on your charts, and it just gives you a sense of momentum. There are parameters within that indicator. So on the top side, it's gosh, you're testing me now. I think it's 70, and on the bottom side, it's 70 as well, a negative 70, and in the middle you've got 50. So basically, if the RSI indicator is above 50, then it's telling you that momentum is moving in the right direction, and it can be added into other chart analysis. It can help to build a picture as to whether you would be looking to buy into a stock. If it's over 70, that suggests that it's overbought, and you might then expect to see a form of consolidation in the price of the asset that you're watching, or potentially a move lower. What it doesn't tell you is the timing. So what we have seen, particularly surrounding Nvidia, all-time highs on the Nasdaq, etc., is that the share prices or the asset price has remained in overbought territory for perhaps longer than what you might imagine it to be up there for. So that's sort of just the one to be wary with as far as RSI is concerned. It does suggest that there could be consolidation or pullback, but doesn't tell you when. So I think if you see an RSI over 70, then I would be cautious about buying in at those levels. Same on the underside, you've got the negative 70. If you see an RSI below negative 70, then that's telling you that the asset price is oversold, and in which case you could be expecting potentially a move higher or a consolidation at those levels, so the RSI can move back out of oversold territory. So I think it's a really useful indicator when you use it in association with other sort of pointers on the chart and the actual share prices or asset prices.
Okay. What's your favourite indicator? Out of curiosity, I always like Bollinger Bands. I found them easy to understand. I like the sound of it as well. Maybe it's hocus pocus, but I quite like them.
It does sound good. Yeah, I'm an RSI fan for oversold and for overbought and oversold. I'm also interested in, I find the MACD, but I don't just use one. I tend to use both of those in conjunction with support resistance levels and moving averages. So a sort of a combination of all those, and then obviously the fib levels as well. So there we go. I've just chucked 5 in there.
Well, we'll cover those. Yeah. Maybe we'll cover a different one each time we chat. I've always liked relative highs and relative lows. So whether a stock is at a high relative to the index or a low relative to the index, I always think that's a good indication of outperforming or underperforming. But no, like you said, it never gives you the timing. It just paints a pretty picture of what's going on. I think that pretty much covers what's going on in the energy and nuclear and AI world. Should we have a look at the news from the FCA this week? I always like it when the FCA put something out. I think they, being a government agency, they have to do things properly. and I think they just put out a really good note on the gamification of trading apps, which of course they hate, and quite quite rightly so. I think there's two sides to it. Gamifying investing and trading has its benefits, I think, because it gets people interested in the financial markets, and whether or not that's for having a short-term punt or investing in the long term. I think people taking more interest in understanding what is going on and the potential returns of having money in the market is a good thing. And if that's one way to get people involved, then great. But the flip side, of course, is, do you want gamification turning into gaming?
Yeah.
And that's the crossover. So what's your view on the gamification of trading apps?
Yeah, I'm with you in the sense that I think it's a way that is appealing to different generations, to younger generations. And as you said, almost to the point where great that it's getting the idea and the concept of trading and investing out there, and encouraging those younger generations to enter a field which is has previously been viewed as rather grey and boring. I think that is the positive. But as you said, the gaming side of it, the idea of these push notifications, prize draws, that side of things, suddenly it almost as if it just sort of removes a little bit of the idea of risk from what's going on, and makes it a bit more into a game, right? Which is what it isn't, because obviously there's real money that's being involved here. And I think, as the FCA pointed out, those that are most vulnerable to those sort of game-like features within trading apps are those who are potentially with the lower end of the sort of affordability scale, so potentially don't have that much money to be able to trade on or invest or be able to lose. Also, the younger generation are also potentially more open to sort of this idea of gaming prize draws, which I think, and it can just change the way that someone thinks about placing a trade. It's sort of the aim of the trade might not and now be sort of assessing the risk compared to the reward, but it's like the risk compared to extra reward, because I might get a bonus point on top of my trade, even if it loses. So yeah, it definitely does have a downside to it.
I actually couldn't figure out what apps they were talking about. There was four things that they covered: flashing prices, push notifications, trader leaderboards, and points and prize draws. Flashing prices, everybody likes that. If you're mucking about in the markets, it's it's pretty incentives to trade aside, whether it's flashing green or flashing red does give you a visual indication of whether or not it's going up or down. So I thought that was quite interesting. Push notifications obviously are great, because stimulus is what makes a market, is putting opportunities in front of other people. I can't really see how that could be a problem. But then the trader leaderboards, that's a little tricky, that one. But I suppose it does give an indication of how well or badly some people do, and I know the FCA have a real problem with trading competitions. Well, I have forever wanted to put a trading competition on. I'd love to get everyone in a room and have a day where everybody trades to try and just for fun, or for just like playing poker. Just obviously it's not the same as playing poker. It's a serious thing, but I think it would be a fascinating experiment and an event to do. But I couldn't figure out what trading app is offering a prize draw where you can win money.
No, I can't imagine that one. Well, if it did happen, it would have been quickly shut down, I imagine, by the FCA, because that would have been a complete no-no. As far as push notifications are concerned, I think actually they can be quite useful, especially if you're not watching the market but you're interested. And obviously it depends greatly on the tone of the push notification, if it's like informative or if it's sort of really pushing for a a position. I think informative push notifications on data that's coming out or data that's come out or a price movement can be informative and useful. Obviously, as I said, that does depend on the tone. If there is a sort of a push to a trade, then no, not necessarily. But yeah, no, I don't know. I don't know which one was doing the prize draw. No idea.
I know. I think they built that. I think they tested nine. They had a pool of 9,000 people, and I think they created their own app or website or experimental tool for the experiment. Yeah. So it was quite interesting. But actually, one of the statistics that come out here, which was quite interesting, was that none of these features led to a statistically riskier investment portfolio at the end of trading. So whilst people did put on a few more trades, it didn't encourage them to take more risk overall, although they did say that prize draws and push notifications increased the proportion of trades that were risky investments by 6 to 8%. So there's a bit of a disconnect there. So there were some more riskier trades, I suppose, when you're seeking out opportunity, but overall the portfolio was the same. So I wonder if people just like what they like, and that's that. So, no, I think that was a really interesting piece. It's obviously quite a long read. It's 59 pages if anybody wants to sift through it. I think, I'm completely honest, this is exactly what ChatGTP is for. It's and say, could you please just give me could you please just give me the highlight? Could you please just give me the highlights?
There we go.
All right, great. Well, I think that pretty much wraps it up. Any features you want to cover? Anything else you don't think we've spoken about?
No, I think we've done it all. That was great. It was a really great way to look at alternatives to AI or sort of the off trade from AI.
Great. Well, Fiona, look, thank you very much for joining us again. It was a pleasure to talk to you, and we'll be back again talking about some more macro events. See you next time.
Excellent. Thanks for having me.